Hi, everybody. Thanks for joining us today. This is the SKALE Mainnet launch series. So we have quite a group together, and we're going to go really deep on proof-of-stake networks. We're also going to talk about Web3 and related issues around privacy and data rights and profit sharing, kind of I guess I would describe it as the next values of the ownership economy or the decentralized internet. So, but a big piece of that coming together, I think everyone's heard stories about having a decentralized Facebook or Google or Uber or these large entities where we have these middlemen that are extracting perhaps more value than they should. The reality is these futures don't come together well without a strong decentralized validator community. And if you think about it, someone and some entities need to run the nodes that will run proof-of-stake networks. So today our focus is less going to be on the future world that we'll live in with Web3, but how do we enable that and how do we execute on that with validators and delegators? Okay, so have an awesome two of the, I think, smartest people in the entire space here today, and really an honor to have you both. Could you each give a quick background on yourselves and your companies?
Sure, Jack, thanks for the nice intro. My name is Hendrik. I'm the CEO of Certus. We're a staking as a service provider. And we started in mid-2018. And my background is in cybersecurity. So I've always been super interested in how to get critical infrastructure done right. And when I saw the first proof of stake networks pop up, and in that sense, I was particularly focusing on Cosmos and Tenement consensus, I just immediately saw a very nice opportunity to work on exactly these kind of problems, where security was then not just more guaranteed by just throwing a lot of energy at the problem with miners, but it was actually about system security. That's how we started, and since then we've been extremely focused on the very low-level technical aspects of staking and providing very secure and reliable services.
And awesome. Yeah, thanks so much for having me, Jack. So my name is Crain. I'm the CEO of Course One, which is the kind of main thing that I'm here, to talk about today, and of course that relates to this. But so I've been working in the crypto space for a while. I think it's around 7 years now. One of the things that some people may be familiar with is the podcast Epicenter. So I started that kind of early on as a way to to kind of learn about the industry, and we've done lots and lots of podcasts, including I think there's one with you, Jack, that just came out about Scale. And at a later point, I joined the Tenement team, and I was a COO of Tenement, and of course worked a lot on first of all, the Cosmos fundraiser, and later kind of building the company. And then as this was starting to near its launch, I felt there was just this massive gap in that you had these white papers, and there wasn't just Cosmos, right? There was Tezos and many new networks coming up. Ethereum was already planning to switch to proof of stake. But at the time, there was really nobody working on, the infrastructure and the business models and where it all goes. So we started working on Chorus One back then, maybe just a little bit before Hendrik started Certus One, but it was really that same time with the Cosmos testnets and Game of Stakes and the launch that I think was where a lot of the companies back then did their initial work in this space. And so since then, we've done, launched various new networks, Scale being the one that's coming up soon. And we've also done a bunch of other stuff, mostly around proof of stake. So we've worked on the user interface and staking panel that I think we can touch on later as well. We've done quite a bit of work on liquid staking. And just sort of explore like what are the things that will be needed in the long run to make this work.
Yeah, so I think that's a really good segue into the first topic. But hey, by the way, before we segue in, I want to say we mentioned Epicenter. if anyone is looking to learn more about the space, I highly recommend just plugging in. Personal story, which by the way, it's fun here to do this this conversation today because I learned about how crypto really works through Epicenter. That was my every day. I've listened to easily over 100 episodes, and it was like I would go running and I would just plug in and like that was my onboarding while I still had like a job in enterprise software prior to starting Scale. So definitely recommend it.
Oh, that's so amazing. Thanks.
Yeah, it's really quality content. So, all right, everybody. So we're going to talk a little bit more about proof of stake networks. And I think you gave a little background of how this whole ecosystem is evolving. And one thing that I've been learning is, and I've seen other industry, I got into machine learning in 2008 and saw that industry completely evolve. And when an industry is in its infancy, you kind of just see the clear picture. You don't understand all of the component parts that will evolve over time. And I think we're really just starting to see the vast complexity and business models and opportunities in the validator side of the ecosystem. So maybe each of you could give just a kind of like, what is the current state? What's going on with proof of stake? Where are we with different networks? But also, there's interfaces and other things being developed and worked on. And maybe give a high level, and then we can go a little deeper.
Yeah, sure. I mean, I can go ahead. So I think one thing was that 2 years ago, this was still kind of like unproven. And there was still a lot of work to be done on like, how do you actually run a validator, right? That was a big question. And so, we had to do so much work around that. And like, how do you manage keys and, sentry nodes? And there's all these technical things around it. And of course, there were things around like, oh, how do you get a network to launch? And, Cosmos, there were so many test nets over a long time. And then this game of stake thing. And I think today we are actually at the point where it's become pretty easy to launch a proof of stake network. And especially with, for example, in Cosmos SDK, right, where you have new chains that are launching like very, very easily. And also for validators, they're easy to support. And so I think that's been a big shift where basically it's no longer hard to launch a proof of stake chain. Of course, it's hard if you do everything from scratch and differently, then it's still very hard. But at least you have that option. And also with Substrate, I think that's kind of becoming a viable alternative or a viable option to like have a proof of stake chain up quickly. And then I think we are still in this phase now where you had a big bunch of layer 1 networks that all wanted to solve the Ethereum scaling problem. Basically all bet on proof of stake, and they're all in some kind of stage between soon to launch or like we kind of launched but not really working yet fully, or at least not to the point where you can deploy applications. But we're kind of in the middle of that process. And you have, of course, some like Ethereum, they're still further away. Others, let's say like a Solana, they have like launched but no inflation yet, and other restrictions. I guess with Scale, we're sort of like a little bit of a hybrid between like layer 1 and layer 2. At least I think of it that way. But
I think that's fair. Yeah. Yeah. Everyone wants a clear answer. Like it's not clear.
Yeah.
You get the best of both worlds. Is my view.
Yeah, and then I think there's many open questions, right? There are many questions around, liquid staking or like kind of staking derivatives, right? That's an area that I think is going to be important, but that's at the very beginning, or has barely started. I think there's going to be areas like interoperability that is going to interact with staking in ways that are hard to predict at this point. Of course, the whole sharded chains are not yet working, but that's also coming. So I think we've come a long way, but there's also so much more that's ahead when it comes to proof of stake. And I think so much that will change, but it will look very, very different 3-4 years from now than it looks today.
I would fully agree with that, Brian. We've really like come far in the space over the last couple of years, but now we just got so many projects, and everyone's at the moment kind of doing their own thing still. And I feel like we're starting to approach a phase where it's just like in the internet, when people have started to discuss and come up with standards that will be established in this community and in this space, because everyone's using different technology. We've got different address schemas. We got different like kinds of cryptography that are used. Now you use like really cutting edge cryptography with the BLS signatures. Others still stick to what Bitcoin's been proposing back then. And I feel like now we've kind of fanned out into very many layer 1 networks and different solutions. And I feel like we're now approaching a phase where this is like funneling together, back together, where we align on standards and things become interoperable, where people try to build bridges between these different solutions. I feel like in a couple of years, we'll have to figure out what are these standards, and which is probably determined by which project is left after this time, because we got a lot of echo chambers in the whole space. We got the ETH space, which is currently like exploding, which I feel like is really amazing that you guys are like working very closely with the developer ecosystem, because it's just so strong. And I feel like this is already a standard that's kind of developed. The whole ETH space, if you ask people how to build smart contracts, and you tell them you have to use your custom language X-based SDK, they won't be like super happy to move forward with it. But if you can tell them, hey, here's Solidity, that's how you've been building smart contracts for like quite a while now, or it's Viper, then they'll accept it. And I feel like we'll see more of this standardization in the different spaces of the ecosystem. And that's what I'm like really excited about, because that's not going to happen on the technical layer, but it's also going to happen on the higher level, like how to properly do governance and all of these things.
Yeah, so I think you brought up a really interesting topic that we didn't even plan to talk about before, but I think we should just dive right into it. So typically, and so I have been starting enterprise software companies for my career leading up to before doing something here in blockchain infrastructure and crypto. And one of the big like learning lessons and the things that's taught in all the kind of Silicon Valley startup schools, so to speak, and you go to Y Combinator, you go talk to Steve Blank or Mike Maples or some of these real thinkers around product market fit, is just the entire element of product market fit, where one, the market needs to have something, needs to have a need for something, but the other piece is how actionable is it? So if you want to go sell something to the enterprise and you have no force.com interoperability, if you want to sell something that hits marketing or sales, you might have a tough road, because if somebody has to change the CRM to then use your auxiliary product, it's just not going to happen. And we're at such early days that I think there's a lot of clarity. Like for us, when we were thinking about Scale, we were saying, okay, we need interoperability into the Ethereum ecosystem. And that was clear because we were able to talk to hundreds of developers and say, okay, this is the spec. But on the other side, and this is where I want to go, when we talk about the validator ecosystem, there is a lot less clarity around how can I just make sure the top validators are going to run nodes for this network. And I think everybody probably has to improve and learn about how you can make the job. And that's one of the things we're learning, is how can we make your job easier? But also, right now we have these amazing teams that are able to take unique, bespoke things and build infrastructure around it. But to really scale, I think we've got to get more interoperability. So what's your perspective on where we are and kind of how things could improve so that we have more standardization from a validator product market fit perspective across the space?
Yeah, I mean, I think a big challenge here is also that if you look at it from a network perspective, like what do you want in a validator? Okay, you want like somebody who's like technically good, going to be very reliable in getting node ops, maybe going to be opinionated about, software changes and can give input, warnings, bug tests, like participates in governance, maybe opinionated about where network can go, maybe does education. Like there's so many things that validators, can do and do for many of these networks. But if you look at it from the position of a token holder, you have this challenge that you like that these things happen, but the benefit is very diffused, right? They kind of, for the project overall, they don't accrue so much to like me particularly like delegating with one validator. So I think that's one of the biggest challenges around validation, is that you have a little bit of a mismatch in incentives, where the network wants like great validators and like all this value to be provided. The token holder, it doesn't directly benefit that much from it. And then especially when you have also things like exchanges or maybe other things that are sort of like this intermediary between the token holders and the staking, I think that becomes challenging, and I think we've seen that that's one of the hard things to grapple with, and so far there's no great solution. I think definitely the network teams can do a lot to help, and I think you guys have been doing that, and like some other teams do a lot to like try to kind of steer things in the right direction. But in the long run, I think it's a big question that's still open.
And let me dive into the whole into your question from a technical perspective then. From like generally running nodes and finding standards, making it as easy as possible to run the node. And I feel like this also comes down to what kind of network do I want to run. There's approaches like with Ava and Avalanche, where you want thousands or hundreds of thousands of validators that could potentially run on a smartphone, on really low-powered devices, where it should be extremely easy to bring up infrastructure. Then we got the like total opposite of like super high-performing networks, which are just maybe run by a consortium, where it might be favorable if it's actually harder to set up a node. And that also comes down to, if I just tell people you can run a node, you run it on Ubuntu, you use Docker, and you use this configuration that I'll give you, then we have a single point of failure. And this is the exact thing we don't want in these networks. If everyone's running Docker, like in our case, my co-founder Leah has just recently found a critical vulnerability in Docker that could potentially allow to shut like every node that's running in Docker down, and then the network's down. And that's exactly what we don't want. So we want like a variety of different setups. We want very, very different teams that are working on with different backgrounds that use different technology stacks to make it as resilient as possible. So I feel like that we want to have, I feel, a bit of a standard, but we must not standardize everything.
It's almost like in nature, we have biodiversity that gives sustainability. And so really good point. That's in complexity, we get strength and a moat against, uniform issues against networks.
Yeah.
Smart. Okay. So hey, let's talk a really interesting topic amongst, I'd say, the validator community is around voting. Okay. And I think to date, there's been a dramatic improvement in proof-of-stake networks of participation, but we're still just, I think, frankly, scratching the surface. And so it'd be interesting to hear you guys talk a little bit more about and maybe inform the audience here, where are we in terms of voting and participation in networks and proof-of-stake networks? And where do we go from here? And then later, I'd love to talk about interfaces and kind of how that can play a role, but maybe just set the playing field for everyone so we understand exactly where we are.
Okay. I can. Okay, I'll start.
Okay.
Yeah. I mean, first of all, I think it's actually one of the dimensions where networks differ a lot by, right? So even though many things are similar in these networks, okay, you have maybe things around maybe staking economics tends to be much more similar, but in voting, we have a model like Tezos where only the validators vote. Token holders are not allowed to vote or able to vote at all. And the votes get fully inherited by the the validators, then you have bakers in their name. Then in the Cosmos example, you have that anyone can vote, like all the token holders can vote. But if they don't vote, basically their vote gets inherited by the validator. So that means if the validators participate, much of the stake is voting. But as an individual, you can still individually participate. You have a model like Polkadot, where actually, or Celo, where validators don't have any voting rights. And those are fully with the token holders. And then, they have some sort of concept of maybe delegating those rights in some ways. But I guess those networks are a little bit earlier. So those are like less developed at this point. Then you have some networks that don't have on-chain governance at all, right? Like I think there's, Solana and Oasis, like they don't have. So it's interesting that you have a very big range of stuff, and at this point we don't know what works best. I think both the Cosmos and Tezos model kind of work pretty well because the validators are generally knowledgeable about the negation network and they keep up with it. So if a vote comes up, they can kind of be like, okay, we got to vote in this thing. So personally, I think the Cosmos model is quite good, where you have to guarantee that actually much of the stake votes. So you don't have a problem where like a whale comes in and they can change the vote. But it still gives, the full rights to all the token holders. And then of course it's about, user interfaces, maybe notifications to increase participation. But yeah, these are some thoughts, but I think that actually there's so many very different experiments that proof of stake networks are doing in this aspect. And it's early to see which ones are.
Yeah, that by the way is a very comprehensive description of the breadth, and I think there's just a lot going on. And Hendrik, how about you? What are you seeing with voting and what's working well, what's not, where we are?
I have a bit of an interesting story to tell you, because my journey in proof of stake blockchains actually started in delegated proof of stake with a project called Lisk, which is very controversial in many ways. But the particular problem that this network had was essentially voter apathy, because voters didn't care at all whom to elect. We kind of had a cartel running most of the nodes. They were capturing most rewards. And the way that the system was structured, this actually allowed them to pay people more rewards than like if they were voting for anyone else. So this was a very decentralized network at the point when I was last interacting with it. And what this kind of leads me to is first.
You mean very centralized network?
Very centralized network. Did I say decentralized? Sorry. No, very centralized. It was essentially controlled by this cartel. And people didn't care at all because they were earning like quite a bit of money by just delegating and getting the rewards, which they were I think they're subsidizing even in some way, which allowed them to attract even more. But what I saw is we've come really far from this point by bringing up especially these strategies as you just, Brian, brought them up with Cosmos, where validators inherit the right to vote, because they are, I would say, uniquely qualified in many ways to judge about development at the network, especially in this stage right now. This might be different like 3 to 4 years out, when it's not anymore about like low-level details of the network and very intricate details, but more about high-level things that people will actually be able to grasp. But currently, if there's a protocol update where the only thing attached is essentially a small summary of feature changes, not a huge change log on GitHub, then it's something where people need to really understand it. And I feel this is great where actually validators come in at this point, because they can make very profound decisions on these kind of topics. Because who knows, I mean, we talked about this earlier, that what the people are actually interested in. For most investors right now, it's probably just making more money, because currently a lot of chains are focused on staking as essentially an end, as a focus, not means to an end. it's not there to make the network secure, but a lot of networks just exist for staking right now until things change. And I feel like, especially in this phase, it's very important for validators to kind of filter the very strong and maybe like profit-oriented opinions of the allocators, which obviously can be overridden. So people can still interact and voice their opinion if they want to. But those that are just interested in the money, oftentimes just let their vote to the validator. And as long as we have a decentralized validator set, we'll also have very, very varying opinions and very strong discussions in this space.
Yeah. So that actually brings up another really interesting topic. You mentioned, Brian, exchanges. So I feel like exchanges are really good at bringing growth and more volume to proof of stake networks. I mean, we're just going to get a lot more people participating, but they also have risks around. You mentioned cartels or centralization. It's actually potentially a big issue. And I don't know, could you guys talk about that? How you see this? Because it's not like purely good or bad. There's some pros and cons. And I'm wondering, like, what can networks and validators do to try to make sure we get the good and less of the bad?
Currently, exchanges are very important stakeholders in chains because of the strong focus on, let's say, the financial aspect of cryptocurrencies. A lot of focus around cryptocurrencies still is in trading. So naturally, exchanges are important stakeholders and should play an important role in decision making. But if we like extrapolate from now, where we'll potentially have a lot of decentralized applications running on these layer ones, then this changes, because then suddenly they aren't the most important stakeholders anymore. But there's a huge variety of projects that are involved in the space that need to have the power to voice their opinion and change things in the ecosystem. Because incentives obviously differ for these different kind of personas in this space. While a user might want to have lower fees if they're just using some decentralized application built on top of a layer one, an exchange might want to just increase the APY of the stakers on the platform. Just want to show them higher numbers of what you can earn with staking on our platform. So I feel like we need to find the balance there. But obviously, we have seen exchanges taking quite substantial stake on a lot of networks. And we've been anticipating this pretty much since the beginning. But now we see it actually happening. And yeah, Brian, I'll let you take that on if you want to.
Yeah, sure. Yeah, I mean, this is a problem we've been thinking about a lot for a long time. And I mean, to some extent, the challenge, as I see it, is that when these proof of stake protocols were designed, they were almost designed with this assumption that, you know, you're going to have these individual token holders and they're going to have their tokens in their wallet that they control the private keys of, and they're going to kind of, you know, vote in governance and do many of the staking actions. And I think a lot of the assumptions in proof of stake networks have, the security has this underlying assumption. And now, of course, we have the situation that people want to trade tokens, makes sense, right? And then it also makes sense for the exchange to say, look, I mean, if you're trading here, just you can stake it from here as well. And that has, I mean, first of all, it has this user experience benefit. But there's also some features of proof of stake, kind of the economics of proof of stake, that make this like very attractive. So in particular, there's like two of them. One is the unbonding periods. So, you know, most proof of stake networks have like some unbonding period. And in that unbonding period, generally you don't earn rewards and you can't transfer the tokens. So like in Cosmos' example, it's 4 weeks, you know, some other ones it's longer or shorter. But that means, you know, I'm having my tokens, I'm staking them, and now it's bull market and, you know, the price has gone up 30% in 2 days and I want to sell it. Then I have this like 21-day delay. And the other thing is that, you know, often you want to kind of take your token, or like, especially when you think in the future of this DeFi and staking merging, you may want to stake the token and use it for something else as collateral. You know, the example of like, maybe you want to open a CDP with your staked tokens. So that's also something that's generally not possible today with the way proof of stake networks work. So you have these factors that actually an exchange can kind of do it, right? Because Binance can say, you know, you can put your token on the exchange and we let you trade and we stake it on your behalf and we just pay you interest. You don't have to worry about it. And they can also say, hey, you can also use it as like collateral to get, you know, extra leverage. And so you have these situations that make it quite attractive to stake on exchanges. And then, of course, the big problem is that those exchanges essentially control like all of the governance and staking rights of their users. And then they start having a lot of control over networks. So, you know, to give some examples, you know, Loom Network, we used to be a validator there. We decided to leave that, but on Loom Network, the last time I checked, out of 280 million tokens, 200 million were staked via Binance. So of course, now they had something where they like limited the voting power of a validator to 28%. So like, you know, theoretic, but of course Binance could just split it across, you know, 3 validators. I mean, Binance has complete control over that chain basically. And of course, at that point, I mean, it's not such a decentralized network anymore. And I think that becomes also risky if you know, you think about censorship resistant, because, you know, maybe regulators could go and right now they don't pay so much attention, but down the line, they could be like, look, I mean, you're controlling this network, you know, now you must implement some policy. And so I think it's important that we actually do have people custodying their own assets, staking from their own wallets. And that we kind of like drive towards that and do what we can to facilitate that. But of course, in the meantime, you know, exchanges, they add a lot of value as well, right? And they're essential. So it's a difficult balance.
And there's a lot of complexity here when you think about the end user. So let's say the future decentralized Facebook of the world runs on the SKALE network someday, right? And one, there's users that would interact with that DApp, that decentralized application or social network, and there's going to be voting and governance there how that impacts, you know, profit sharing of ad dollars, of opting in for data rights and maybe monetizing your own data as opposed to Facebook making however much money. Or you could just think, or like, you know, think about all the complexity we have now where what's fake news, what isn't, what's manipulation of like market or like government or voting trends. There's all these things that happen. And imagine if like people could vote through those networks and those applications on how they govern this, you know, community-owned social network essentially. But if it runs on SKALE and something on the protocol level can impact those decisions at the user level, and we have dramatic centralization on the base layer, then we have issues, right? So it's really critical to keep, to have end users and supporters of end users understand both issues and how it impacts not just the protocol, but the users of the protocol.
Yeah, totally. And I mean, of course, there's recently probably some people saw the case of Steam, where, you know, you had Tron, basically, you had some conflict between, you know, Tron and some people in the Steam community, I think many people in the Steam community. And then, you know, there was also some anti-governance vote. And then basically Binance voted along with Tron, you know, take a certain action, which ended up causing a hard fork of the network. And of course, Binance voted, you know, kind of like with all the Steam tokens that, you know, people hold on Binance, right? So that didn't really, you know, in a way, those people didn't choose, right, to exercise their voting rights that way. So I think that's you know, it's a tricky issue. But maybe let me just mention, just mention one thing, because we ended up doing this research project on this topic, especially how you could use a tokenized version of a staked asset to get rid of some of those issues, not all of them, but that, for example, you'd be able to trade a staked asset without having an unbonding period. And that kind of at least levels the playing field a bit between decentralized exchange and like centralized exchange. So if people are interested in that, maybe you can put a link in the notes or something. But if you Google like liquid staking course 1, then you'll find we have like a 90-page paper that we ended up writing on this topic.
Yeah, that's my weekend reading. I will dig into that. That's pretty amazing. You guys did that level of. We need that though. I think we're also lacking. We can vote, but if we don't really understand, if no one's done research to help guide informed decisions, and we're might end up where we don't want to be. But yeah, Hendrik, what do you think? Any thoughts on the app layer and the and voting at the protocol level?
Yes. Let me find the words to say that. In the end, with voting, it's kind of like in the real world. If we look at like how much it takes to get people to vote, how much campaign money in some ways. I mean, there's not just campaigns of parties to make them vote for them, but there's actually also huge campaigns going on to make people vote at all. And I think that's not different in the cryptocurrency space, especially if we get to that point where it's not just enthusiasts that are voting on chain, where it's actually just users. Before this session, you brought up the point of someone that's using a betting platform on top of some layer 1, but obviously has to hold some tokens off that layer 1, some native token, just to pay for fees. But that person might not even know that they're using Scale in the background, that they have any voting rights. And at the same time, they just might not feel relevant enough to vote, even though they might hold a quite substantial share in that network in some sense, at least. Or when we have really like good decentralization, things become really hard. I mean, there've been a lot of things going on Ethereum where we have like really solid token distribution in some sense. At least across a lot of addresses. It could be that there's an actor that's just split their stake across a lot of addresses, but I'd say Ethereum is one example of a chain where we have a really diverse distribution of asset ownership across mostly unknown parties, at least. And there, if we look at carbon votes that we had on hard forks and decisions being made, essentially those instances where we use token voting, things have become really complicated because there's just not been very huge participation. At the same time, I think we need these kind of systems because if we don't have them, we might end up becoming very slow. This whole governance, this whole like concept of governance that we now have in these networks has helped speed up development and just iterations on the protocol so much. If we compare like larger and older networks, governance is extremely, extremely slow. Looking at, I mean, it's also fair because looking at Ethereum, for example, we have billions in assets now locked in DeFi alone and way more in ERC20s in general. But at the same time, changes to the protocol are really, really hard to make. The whole EIP process is nice and standardized, but getting an EIP approved doesn't mean anything. You still need the miners to be okay with your decision, and you need a majority of like node runners to actually accept it. And that's an interesting kind of voting, but that also means that the network is progressing way, way, way slower because there's no good way to find any consensus because they don't have native governance built right into the protocol. But some kinds of mixture of social consensus, mining power consensus, and whatever else there is in the middle has developed, and it's way slower. That's why things tend to take a lot longer there. And I'm actually very curious to see how this evolves with protocol native staking, especially when there's more at stake on the protocol in terms of applications. Will we still be able to move faster because those people voting know the protocols are important stakeholders? And yeah, so I'm curious how that will work because it's way more transparent than a lot of processes on other networks.
You know, so when you look at the SKALE network, I'll give people a little background on where I think we're going to have like very serious voting in the future, and especially when there are thousands or even tens of thousands of dApps running scale chains, if we can get to that level, we're going to have some real friction that will be good and healthy because we're needed, because there's no way that we magically set the economics perfectly. It's impossible to do. Like, what you have to do is give your best effort and then make sure you have an agile system that's not brittle. Otherwise, you're going to get hard forks. So very specifically, developers who run Ethereum applications then can pay for a scale chain. There's a price curve, so the more overloaded the network, the more expensive the chain is, which incentivizes more people to come set up nodes. There's also a minimum stake requirement per node. If that's too low, it costs too much operationally to run the network, and it makes it more expensive to run 10 nodes if you're a validator, or to run, for X amount of scale tokens, you might have to run 20 nodes instead of 5, right? So your operational cost grows. And then there's this whole element of bonding periods and returns, and so I feel like we're going to come to this place eventually where we're either going to have to increase fees or decrease or raise the minimum stake requirement, and the validators, and so we have to have a win-win here. You have to have a win between developers paying, validators running nodes, but also delegators who are getting return for putting their capital into play to secure the network. So there's three parties that have, and two of them have similar but different views, but they need each other to work together. So the interesting thing about this is, I think having user interfaces is going to be dramatically a game changer for delegators. And so I don't know, both you guys, I know Anthem's being worked on, and we'd love to hear more about that. And Hendrik, if you can also address, you guys have done some really interesting stuff with prior networks, and if you could talk about what you're working on and what you're seeing and the role that plays. And even you could use Scale as an example of in the future when voting happens, that really impacts the money people pay or take home at the end of the day.
Yeah, sure. I mean, as you pointed out, right? It's. I mean, for us, we've been, the kind of work on Anthem came from a few directions. So Anthem, just to give a little bit of background, it's basically like a user interface that people can use to stake, as well as to see historical data about their staking and their rewards performance. So that's kind of like it right now. And this is live on Cosmos at the moment. Celo and Oasis are about to go live, or I think Celo is live, but maybe not Ledger integration yet, and Oasis go live. And then Scale is also coming up soon. So we're excited to work on Scale for that. So one of the reasons, we wanted to work on, or like kind of one of the initial things was also that people were staking, for example, on Cosmos, but to answer the question of like, how many tokens did I earn last month? And you know what? That's not a question. You can't check your block explorer for that, right? That information is not in the block explorer, but that information is actually very essential if you want to do your accounting, if you want to know what's going on, if you want to do your taxes and things like that. So that was one of the reasons why we started to work on it. Of course, governance is also something you can do there, so that you can do kind of the key staking actions with governance. In the long run, where we see this also going, is that we think that kind of the staking is going to become more complex, right? So the actions that a user has to take and when is the right transaction to send where, that's going to become an increasingly complex decision depending on various factors. So to help people make those transactions appropriately, I think is really important. And I think that's where user interfaces can help a lot. First of all, through the right data, through making it easy to send a transaction, and down the line, potentially through kind of like helping people automate transactions as well. So that let's say I can decide, I always want to make that transaction according to that rule, and then it kind of gets made on their behalf, without giving up custody. So that ends up being kind of like an interesting, complex problem. But we think that's going to be something that's super important. And so that's kind of the direction where we want to take Anthem in as well.
Yeah, I would agree that it's very important at this point, probably most important to improve user experience there. I think until Anthem, most of this information was either just accessible via CLI or just manually scraping a ton of data. We've been doing this ourselves, essentially processing like at some point almost, I think, a terabyte of raw data just to find out how much our customers were making with staking on just a single chain. And that's just incredible because that's a load that a single user can't handle. At the same time, it's very hard without right user interfaces to understand all of these mechanisms. And then there's the other problem. We now have so many layer ones at this point with very interesting projects building on different chains, where a single user might not want to use 5 different tools to access 5 different chains. I want to have a single point to look at, because if there's not a single point, I will maybe just care about the one that's most important for me, or even about none at all, because it's just too complex to handle that load of voting on different chains, of handling my stake on different chains. So unifying that experience at this point, where we still have very many layer ones, I feel like it's just the right thing to do to show people what this actually means and get them used to it. Because the habits that people build now, they will still be there in the months and years to come. And I think it's a very good habit to tell them to vote and have them vote. And if you make it as easy as possible, they will do it. And they also will participate in all chains if they can do it from one interface. So I feel like this is a very exciting development that actually, because oftentimes what we have is these protocols focus a lot on the low-level tech, but oftentimes forget about the user that they're in the end building their layer one for. A lot of layer ones see developers as their customers, but I feel like this is a huge mistake to make in the long run, because in the end it's not going to just be developers, but it's actually going to be users using the apps of these developers. And if you are not able to satisfy the needs of these users, you neither will be able to satisfy the like larger, not like first level, but second level needs of your developers as well. Jack, you're muted.
Sorry. Hey, great point. I've been talking a lot recently about how we have these 3-sided marketplaces, and typically you have a 2-sided marketplace, but in this environment in crypto, there's oftentimes like people who pay for the service, and Scale, it's developers. You have delegators who stake, and then you have validators that run the network, right? So it's there's 3 sides here, and they all have mutually aligned incentives, but sometimes I think we'll see how, as to get real growth, we're going to definitely need to modify and make sure that we can get people engaged, and you have to think about all of them as customers if you're building at the protocol level. You can't just only worry about the developer, or there won't be a stable service for them to purchase or rent. So hey, I've got one more question for both of you, and then we'll go to some questions from the audience. So wanted to talk about I think the future of DeFi, but with a different lens. So I actually feel like once we have really broadly established networks that have strong proof of use bases, or strong proof of stake bases, what we're going to see is like new financial instruments and products where you can participate in networks, and there may be somebody who's staking for long terms and then selling components of that at greater liquidity or combining it. And I actually feel like one of the issues with DeFi is that sometimes it's a circular thing of like leverage against leverage against leverage to bet on tokens. And one outlet to having real loans is actually loans to stake to give security to applications. And so networks like Scale and other networks that have staking that provide security end up becoming like a real use case for DeFi to play a role, to participate in staking and let people participate in an indirect and bundled manner. And we're like, this is maybe crazy talk right now. We're not there yet, but do you guys see this kind of evolving from your perspectives, and any thoughts on where this could go?
Do you mean like that that users, that because like an app puts kind of up a collateral in tokens that can be provided by people.
Well, I'll give you a very specific example. Let's say that you could buy, let's say some big financial entity buys, a huge chunk of Scale 12-month stake that gives them double return, some 3-month stake, buys stake in another network and buys, a chain link stake component if, that existed, and buys something else, and then is able to bundle that financial instrument together and then basically create this bond. Just like people, hedge funds buy a lot of mortgages from mortgage sellers and then create these like varied financial instruments. And basically what I'm getting at is, do we think these layered financial instruments will live on top of decentralized protocols? And I don't know, I think this is like out here a ways, but I could see this happening, and it could have various impact on protocols and voting.
Yeah, 100%. Absolutely. I think that's absolutely going to happen. And I think that's going to end up being a big thing. I mean, I think that's very much the liquid staking work we've done. I mean, it's very much that direction, right? Because what's the first thing you need to do there? To do that, like, you kind of need to get the staked asset out of this, escrow thing, right? You have to tokenize basically the staked asset. And then, what's the great benefit of tokens? Well, they provide like liquidity, and they basically create markets where the markets don't exist right now. And, it's kind of like ironic maybe that in proof of stake, that's exactly the case, right? Because you have to stake assets that become then like illiquid, removed from market mechanisms, and by tokenizing, kind of bring them back. Of course, bringing them back will open up all those things, right? You can like package them, layer them, you can provide insurance. You could say like, there's now some people that have more risk of slashing, but they get a high return, and other people have less risk. And so I think all of those things, they are going to happen, and I think they're going to be certainly interesting. I know some people are like worried about it because they think too much financialization is a bad thing. I think on balance, I'm still. I think it's a positive thing that like should be embraced, and especially that would be futile to try to prevent, because it's just that's not going to work.
Mm-hmm.
I also think it's inevitable that we are going to see these kinds of products being built, because DeFi is just, especially at the moment, the hot thing in the space. It's where most value is locked. It's where most users are at. And I also feel like this is one of the most exciting use cases, because as much as I've been firing shots at people building diverging standards in the space, what's unique within one blockchain is that it provides you with a set of fixed standards and native interoperability within that protocol. And that's something that the Robinhoods, hedge funds, and BlackRocks of this world will, I'll say that, not be able to do. They just can't build perfectly interoperable products, not just because they're competing in some ways or collaborating in others, but also just because it's so easy for everyone to build interoperable financial instruments, because we have two things. We have collateral that's actually worth quite a bit of money. We have all of these stable coins. We have the crypto assets that themselves are quite valuable at this point. So we have sufficient financial capacity. At the same time, we have these instruments or these tools that allow people to work with them in a perfectly interoperable way. I mean, in the beginning, probably no one was anticipating the thing, or few people, that we currently see on Ethereum, where all of these singular products are now being plugged together to build this whole yield farming construct. And this is something that will hardly be possible in centralized finance. So I'm very sure that it's going to be like one of the primary use cases, and that we're going to see exciting use cases with that as well on the staking side, as you mentioned, with networks buying in different shares here and there to incentivize people to do this and that, or support that S-chain, for example, this shard. And I feel like this is super exciting. At the same time, it's also it's risky in the beginning, because there's things that can go wrong. What happens if someone flash loans a bunch of tokens and votes on governance and then puts them back if there's no waiting periods, and influences like instant decisions? Or what happens if people heavily leverage their own stake up? I mean, if I have a liquid staking asset, I can use that as collateral to lend more of the native asset and stake to myself in some way. And I could chain that for quite a while, especially if we think that depends on how the peg between these assets is. If it's super stable, I might be able to leverage myself up to crazy leverages. So that could also be dangerous, because if you're the first to figure it out, you might be the one ending up with more than 1/3 of the network that can now halt it. So all things that we need to figure out.
Yeah, curveballs are coming.
Yeah.
but there's a lot of open space. There's a lot of green here to grow, and that's one of the exciting things about this industry. So, okay, Alicia has a really good question here. What do you feel we could do to involve more users into the governance conversation?
Yeah, I mean, I think user interfaces certainly play a significant role. I think, simple things like notifications are going to be useful, right? Because if I'm get like alerted, oh, like Scale governance vote coming up, and like this is what it's about, like that's going to dramatically increase the chance for people to participate. Than if I have to go and check some forum and like I don't even hear about it. I think down the line, maybe things like the ability to delegate voting rights would be great. And, if I could see like, oh, I can delegate my voting rights to a bunch of people, and like, here's kind of their philosophy, here's where they're going. But I think at the same time, we probably have to acknowledge that most people just will not participate. Maybe except for some issues, right? I mean, if I think back to the Bitcoin scaling debate, there probably many people would have participated. So maybe that's okay too, right? If you have validators doing a lot of the voting, and then if there's like really contentious issues, maybe then that the community has the ability to like step in and also participate.
I feel like we need to tell them what's in it for them. Or how is it good for them? If it's just a token holder, we've had the Stargate proposal on Cosmos, for example, which is going to increase the amount of transactions the network can handle, which is going to bring a first version of IBC. And all of that adds immense value to the network and potentially immense value to the token. So this is naturally an incentive for the people to vote on this kind of proposal. It just needs to be clearly communicated to like their specific interests. However, that's hard because ideally people holding tokens are anonymous. So how do I reach them? And I think this whole debate then comes back to good tooling that also aggregates information about these decisions in some way or makes them accessible. It's hard because that's some form of journalism which could be opinionated, but I think we need to find a good middle way there. But essentially, I feel like this is the only way to get people to vote. If there's something in it for them, they will.
I'll feel like proof of stake networks have made it, so to speak, or like gotten to this next level when we start seeing like real campaigning around change policies and the materials and like banner ads to like on different websites to try to inform people and sway opinion. So I think it's coming, and it'll be a good signal that we've, I think, not arrived, but we've hit the next major milestone. So, okay, hey, so Brian and Hendrik, this has been absolutely phenomenal conversation, and I hope the audience here, I'm sure, has enjoyed it. I have, and just to hear both of you talk about this topic is really amazing. I mean, the level of knowledge and and depth here is really special. So thank you. Thanks for being here. Thanks also for supporting Scale, and we appreciate you being part of the community.
No, thanks so much.
Okay.
Yeah, it was a pleasure, and it's great. It's great being part of it, and yeah, we're excited for a Scale launch too.
Absolutely.
Right around the corner.
Yeah.
For phase 2, the phase 2 launch. All right. Well, hey, everyone, thank you so much. It's been a pleasure. Have a great evening, day, morning, depending on where you are. Bye.
Awesome. Bye. Take care.